All right, boys. As if the economy wasn't shit, I got a video here that pretty much proves it. If you've been looking at what Zillow and you're tracking homes in your area, I've been looking in the Phoenix area, and there are multiple houses that I'm looking at that I've seen drop by 10 to 20,000 month over month over month consistently. They're knocking down $3,000 to $5,000 off the price. No houses are moving off the market. Rent, same thing. I was looking at rent. I'm seeing houses drop by $100 every 3-4 weeks. Every month, there's a house that went up for like, let's just say 2,700. Now it's all the way down to 2,400.
Right now, housing is a tale of two Americas. In the South, prices are collapsing. In the North and Midwest, stability still holds, but as I'm about to show you in this video, cracks are forming. What started as the biggest bubble in US history is now popping. Yet up here in the North, buyers and sellers are acting like nothing's happening. I'm sure if you watch real estate videos on YouTube, this is not going to be a surprise, but I don't think anyone really understands just how troubling the situation is in some of these markets and how it's spreading to the rest of the country.
Honestly, I'll be shocked if we don't have an official full-blown recession by like 2026. I think the economy is already on shaky foundation right now. You could tell the numbers are shit. Inflation is still high. Housing prices are stubborn, and the supply glut is real, and people still can't afford them. The prices of cars have gone up dramatically. The average car payment is over $700 now. Jobs are disappearing. People are getting fired in mass, especially in tech. AI is already having an impact. Can you imagine what another year of iterating on AI will be like this time next year, guys? What do you think AI is going to be like this time next year? Because this time last year, the models were shit. They could barely talk to you. All their information was garbage. They couldn't search the web. They couldn't even generate images like they do now. They couldn't even generate videos like they do now with all those, what is it, like the Yeti videos that you're seeing. What is another year from today look like? I could tell you it's going to be absolutely incredible. Yeah. 2026 is going to be an incredible year in a negative sense.
Take, for example, this chart by Nick Gorelli, otherwise known as Reventure Consulting. It shows the number of active listings by region split off by essentially the two portions of America outlined in my thumbnail. Down here in the South, inventory is actually higher than what it was in 2019, and worst of all, it's growing at record pace with no end in sight. From the bottom in 2022 to now in 2025, the number of homes for sale in the South and West has exploded 290%. If you map it out, that's a pace of 31% each year. Meaning that by the summer of 2028, 3 years from now, there will be nearly 2 million homes for sale in this region, which is 10 times the number of homes that were for sale during that 2022 top. Now you might say, well, what's the big deal? And to be fair, inventory doesn't represent prices. It's simply a measure of supply. But like anything in economics, if you flood the market with supply, we know what happens to prices. And it's already happening even with the supply at 824,000. You can see by looking at nearly any market in Texas or Florida that prices are already under serious pressure. Obviously, everyone knows about Austin, where prices have fallen 23% since that infamous peak in 2022, but Florida is also now faltering. There are already a few places in Florida with 15% declines, in particular Cape Coral, which has fallen 17%, and Punta Gorda, which has declined 16% since those 2022 tops. But in a lot of these cases, it's not so much the...
I think these have something to do with flooding. I can't remember exactly which one. It might be both, but specifically, I don't think there's any more flood insurance being offered for one of these two communities, if not both. That's why the drop is so steep. But yeah, houses have been dropping by 5, 6, 7%.
Fact that values are down double digits, it's concerning because of the pace at which this is happening and the environment surrounding it. For example, in Punta Gorda, in just the last year, a typical single-family home has declined 12%. And this is happening in a place where active inventory is exploding way past any levels we have seen since at least 2017. Now, this may sound bad, but it's actually a lot worse than just a simple price stat, and we can visualize this by digging deeper deeper into a single region. Let's use Punta Gorda as a lens into what's happening across much of Florida. Prices here are already down 10%, but that number doesn't even begin to scratch the surface. This isn't a soft correction, it's a true spiral. At the same time, home prices are falling, mortgage rates are hovering around 7%. So even with lower prices, homes are still brutally unaffordable for most buyers. This creates a dead zone in demand. Now zoom out and look at the builders. Margins are getting crushed. Builders are slashing prices just to move inventory, putting even more downward pressure on the resale market.
So my old business partner is still working in construction and remodeling. I have other contacts that still do remodeling and construction all over the US. The story is the same for everybody. Residential is dead. Only commercial work still exists, like working for other businesses. Builders are struggling. Houses are sitting on those lots brand new, and that's scary for the people that bought like a year or so prior, and they paid, for example, let's say you paid $435,000 for your house, but the builder just finished another lot in your neighborhood and they're pricing it brand new for like $375,000. What do you think that does to your price? You're stuck. You're already stuck. You can't get out of that one.
It's not just a competition anymore. It's neighbor against neighbor, builder against homeowner. Inventory is obviously quickly stacking up, not because people are selling, but because they're not. Sellers are frozen, pulling listings and waiting for better conditions that may never come. Then there's the psychological wreckage from 2022. Imagine paying $450,000 for a home 2 years ago and now seeing builders offering nearly the same home for $375,000. That's not just a paper loss, that's a gut punch.
You see?
People feel trapped, bitter, and desperate, and that desperation is exactly what this market is built on right now.
That matches what I've been told. That's crazy. That matches exactly what I've been told. Pretty much, it used to be pretty even when I was still doing remodeling and construction. It would be about 30, something like that. You'd have residential work, you'd have commercial, and then you have the government contracts, right? Working on public buildings, schools, shit like that for the county. Then it switched. After COVID, that shit was like maybe you would do 15% residential, and even that, the 15% of the residential that you still did was like nothing but ultra luxury mansions. Thank you. And then the rest would be business to business. You'd work, renovating hotels and stuff like that, or, Chick-fil-A's or whatever the fuck. Now it's mostly businesses, and like 5% of that work, 10% of that work is just purely luxury. Luxury residential, that's it. The high-end boutique market, and the rest is commercial work. That's it, guys. It's so fucked. You have no idea. This is one of those indicators that's lagging. But it tells you that the economy is about to go to shit and just roll over and die. For real. I don't know how, and our interest rates, like we're already talking about lowering interest rates. Like, do you understand if Trump gets his way and lowers interest rates, I understand that helps the federal government pay off the massive interest rate that they have. Their payments are already over $1 trillion. But what does that do for assets? Dude, houses are going to explode again. Gold is going to explode again. Bitcoin is going to explode again. Commodities are all exploding. The dollar is going to get devalued even more. And then if we enter into like stagflation or something like that, where jobs are still not being created despite low interest rate, there's no more levers to pull. Interest rate is already low. We're going to end up being in like a fucking zombie economy like Japan. Yeah, lower interest rates are going to flood the market with cheap money. Indeed, we're fucked, dude. You have no idea. If he gets his way and Powell gets fired and they lower interest rates just so he can make the government payments. Also, if we're really trying to fix the economy, why did we raise the debt ceiling? So if we have to pay our debt, we as in the government has to pay the debt, and it costs trillions of dollars in interest alone, and he wants the interest rates lowered for that, that doesn't affect rich people at all. Because they have the assets. They want to inflate the market. It's an asset, like an inflationary asset market. Who wouldn't want more money when you already own multiple homes? Did you know Blackstone is starting to buy houses again? Did you guys know that? There's like I don't know if I even saved that. I should have saved that article to talk about. Blackstone is buying homes again after slowing down for a little bit. Yeah, I don't have it saved. Damn. Somebody look it up. Incredible.
Seeing is the early stages of a full-blown unwinding, one that mirrors 2008 not just in numbers but in sentiment, fear, and loss of confidence. The pain is layered, economic, psychological, and structural, and it's not done, not even close. Everyone thinks this is just a southern problem. Oh, it's just Texas, it's just Florida, it's just Phoenix cooling off. That's the line, right? That the downturn is contained, but the data is starting to tell a very different story, and it's creeping into places no one expected. Take Ohio. Not long ago, this was one of the hottest markets in the country. You couldn't walk into an open house without stepping over 3 bidding wars. Homes sold before the weekend even started. Now things are shifting, quietly but fast. I'm not saying Ohio is in a freefall like Austin or Punta Gorda, but denial doesn't change the trend. If you peel back the layers, and I mean dig into the Realtor.com dashboards like I have, it gets real. In my own county, active listings are up a modest 10%. Nothing too crazy, but look closer and median listing prices are down 11 of the last 12 months year over year. That hasn't happened in nearly a decade. It's not noise, it's a pattern. Inventory still low by historical standards, but that's not the point. What matters is the direction. For 19 of the last 20 months, inventory has climbed. New listings are stacking up, and that seller's market momentum, it's fading fast. This is how housing corrections unfold. First the noise in the flashy boomtowns, then you start to see hairline fractures in the places nobody thought would crack, and by the time people realize it's not just the South, it's already here. Now keep in mind, this is all happening while the unemployment rate is hovering near all-time lows.
Listen to this. So the title is Blackstone is buying rental homes again. What it means for the housing market. Blackstone, not BlackRock, guys, is doubling down on single-family rentals with its $3.5 billion acquisition of Tricon Residential, gaining control of nearly, hear this, 62,000 homes. This move positions Blackstone as the third largest institutional landlord in the U.S. and signals that Wall Street is once again reshaping the housing landscape. The third place guy owns 62,000 homes. What do the top two earn or have? Holy shit. You want to know why you can't afford homes? I wonder why you can't afford homes. You want to know why rent is so goddamn high? I wonder. Where are our politicians? Why aren't they saving us from this? Why are companies allowed, these hedge funds, these fucking private equities, why are they allowed to buy up single family homes? Can somebody explain that?
Maryland Guy 0326 sent $4.99. I bought my condo in 2015 for $110K, now it's worth about $250K. I'm glad I got in when I did. I feel for younger Gen Z. They never had a chance.
They never did, bro. It's hard out here. It's no joke.
Lows, and the S&P 500 is pushing all-time highs. We're living through 2 bubbles at once, but only one of them, housing, is showing cracks. On the stock market side, it feels like nothing can stop what may be the largest asset bubble in history from inflating even further. I'm planning to drop a more focused...
Dude, can you imagine, like, all that's driven on the back of NVIDIA pretty much? And it's now a $4 trillion company, I believe. Can you imagine if somehow the AI bubble bursts? Whatever it is, anything, maybe real estate is the first domino that then causes people to panic and scurry away from risky assets. So then they'll get out of some of these overvalued stocks, which is honestly, most stocks are overvalued. Like, can you imagine that's the bubble that burst all the other bubbles in a domino effect? Like, oh my God, is that going to be epic? And in a horrible way also. I mean, trillions of dollars of wealth will evaporate overnight from the market. And last time, or I should say every time we've had like an economic reset, it took 2 years to bottom out. Can you imagine that? 2 years to bottom out. So once we have the initial crash, that black whatever, Monday, Friday, whatever day it's going to end up being, right? The start of the recession takes 2 years to bottom out on average. So you should start deploying some of that dry powder, like guys sitting in cash or gold or whatever. Gold, there's a lot of guys sitting in gold. I mean, not financial advice. There's a bunch of dudes on, with Bitcoin right now. Bitcoin, I feel, is a bit riskier because it's still well, let's be honest, guys. It's a speculative asset still. And if the S&P goes down, so does Bitcoin. Bitcoin basically follows the S&P in lockstep. It goes down twice as hard as the S&P, but recovers twice as hard too. It's a double-edged sword. Yeah. Someone say, you need money to buy gold. Bro, you need money to buy anything. Now, if you don't fucking figure out how to get ahead in the next couple of years or AI proof yourself, you better learn to like eating bugs.
stock market bubble videos soon, but here's a grand summary. By every major metric as of June 2025, this is the biggest stock market bubble ever. The only periods that come remotely close are 1929 and 2000. Take the Buffett indicator, for example. It's approaching 210%, a level never seen before. That's well beyond the dot-com bubble and even the 2021 meme stock mania. Then you've got the Shiller PE ratio, which compares corporate earnings to prices. That's also pushing towards all-time highs. The only times we've ever been close to this were 2000, 2021, and 1929. Each of those times was followed by severe market corrections, if not outright crashes. In 1929, the market didn't just crash, it detonated. The Roaring Twenties turned into the Great Depression practically overnight. Then there was 2000, the dot-com era. Companies with no revenues and names ending in .com were getting billion-dollar valuations. People quit their jobs to day trade. And then the bubble popped, the Nasdaq fell over 75%, and some of those companies vanished into thin air. And in 2021, valuations soared again. Tesla, meme stock, SPACs, you name it, the market was high on hype. But just like the others, gravity came calling. What looked unstoppable suddenly started bleeding value day after day. That's the playbook. When valuations break from reality, they don't land softly. They crash headfirst. And here we are again, staring at the same flashing warning lights, pretending this time is different. Now we have the most overvalued stock market in history, unemployment near record lows, and yet cracks are forming in the housing market. Can you imagine the pain if even one of these other economic pillars starts to collapse? The damage wouldn't just be bad, it would be 10 times worse than anyone's pricing in right now. Thank you guys for watching.
Yeah, we'd get absolutely cooked, dude. As someone who's been looking for a house for the last 5 years, we're not going to buy a house unless the price drops back to what it should be. You're talking pre-2020 prices, yeah? Look, everything will reverse to the mean. Always. We're way above the mean right now. I'm closing on a property in Delaware in 3 weeks. I'm sure the market will collapse after we close. Thanks, bro. This guy right here is our leading indicator right here. My man, Michael, he called it. He's closing on the house. It's all going to shit. Thanks, Michael. You were the sacrifice we need. I said prices will go up where people want to live and go down where people want to escape. If I learned anything from the 2008 crash, the Northeast didn't correct for about 3 to 4 years post-crash. You see? Some markets are a little bit more resilient than others, but eventually it all comes down. Yeah. Everyone is noticing, they just don't want to advertise it. Remember, it was 2008 when it started last time, but went public over a year later and lasted 5 years. Portland and Southwest Washington sellers are still high on copium, but the listings are rotting on the market. Sold the primary home in June 2022. Renting, waiting, circling, patient, determined to get the best home at the best price soon. You know, the worst thing that could possibly happen is stagflation, dude. The prices are just stubbornly staying up there, despite there being almost no demand, no jobs, no spending. That's the worst. If we head into a stagflated market, God, man, God help us. That's going to really be shit. Yeah. Bozeman, Montana here. It's happening. Seeing new homes drop pretty quickly. Local builder had spec homes listed for $629,000 to $650,000. Now the same model home, look at the price drop. The same homes are now $525,000 to $550,000. This is over the past 6 to 8 months. They're bleeding money. The housing market is also cooling in my hometown of Davenport, Iowa. We sold my mother's home. She died last year for $293,000. I spoke to the agent who sold her home 2 weeks ago, and she told me we sold at peak because prices have gone down since then. In LA County, no one will sell if they have a Prop 13 keeping their property taxes less than a third or less for the same value for its selling year. Yes, 5-bedroom mini mansions with 2 old folks is the norm. Wow.